Hey guys, Aaron here, EquiFirst Lending, where we put your future first. I wanted to drop a quick video on something I was talking to a family member last night with. Actually home with the kids today. They are off from school. Kiddos, say hi.
Hi.
All right. Yep, home. They have a teacher's planning day, but wanted to drop a quick video. Let me step outside for a minute. And as a family member, we were talking about the importance of home ownership and just what it means. And her two questions came up. She asked, well, what if I don't have great credit? And what if I don't have a lot of money to put down? And those are two very pertinent questions. And I think a lot of potential homeowners, those who are thinking about purchasing a home, have those as obstacles to overcome. So I wanted to address that. And this is what I told her last night. There are a lot of people that think that renting is the way to go for now. I'd rather rent and not have the burden of owning a home. But let me give you an example. So if you do rent, typically you're required to put, first month's deposit, maybe last month in the security. So at least two of the three, most people are required to put down when they rent. If you rent in an area and your property is, say, around $1,200 a month to rent, that could be anywhere from $2,400 to $3,600 you're using to secure that property. All right. And say you're there for just say a 2-year period and they decide to raise the rent on you. Well, you're going to probably go and find another place that is that doesn't have as high a rent. Sorry, the sun is hitting me right now. Let me get back in the shade. There we go. But in 2 years, you go and find a property and that's what you want to rent. We got some neighbor in the back singing. That's funny. But you go through the process again and say your rent there is $1,300 a month. So if you have to do two of the three again, that's $2,600. So in 2 years, you put down $5,000. And if you would have used that money as a down payment, say you find a house for $200,000, most programs, there's a FHA program, you can use 3.5%, which is $7,000. And you already got $5,000 or $7,000 saved up that you put toward rent. There's also programs where you can get down payment assistance. We work with the program now where they'll give you up to 2% of that down payment required by FHA. So now you're only having to come up with 1.5%. And in our $200,000 example, as a purchase price, 1.5% is $3,000. So you'd have put less down on actually buying the property than you would have put toward rent over that same time period. So there are ways to get around the down payment obstacle. There are also programs, if you're a veteran, the VA program, they do 100% financing. USDA has a program through the government where they also do 100% financing, but there are certain qualification requirements you have to meet. But there are ways to get around a down payment. Gone are the days where you're required to put 20% down on a property. So if down payment is your obstacle, most people, you have to pay for living housing expense anywhere you go, whether it's rent or own. A few people, you're living with your parents or a friend and try to make it as cheap as possible, or maybe living rent free. But for the majority of people, you're going to have a housing expense. So why not own? You get all kind of fruits from ownership down the line in regards to appreciation and equity and things of that nature. The second question she had was in regards to credit scores. Her score, I don't know what her score was, but a lot of people have that, mark, man, I don't have perfect credit. I don't have a 720 or 740 or 680. But there are programs where you can obtain a home with as little low scores of 580. Some programs even go lower than that, but obviously your interest rate is not going to be the best. But 580, 600, 620. If you get a 620 and 640, definitely or higher, you're definitely in a good range to obtain a decent interest rate on your property purchase. So you don't need to have perfect credit. Again, with programs like FHA, they're a little more flexible in their guidelines in regards to people having credit hiccups and things of that nature. So I wanted to just drop this quick video because I know that's an obstacle for a lot of people, especially first-time homeowners, first-time home buyers, I should say. Where do I come up with down payment, or how much do I need to have saved, or I don't have perfect credit, so what do I need to do? So if you have any questions, hit us up, let us know. definitely happy to assist you, at least give you an advice. We're your mortgage advisor. We're your debt consultants. We're going to help you look at the big picture, not just an interest rate, not just closing costs, not just down payment. We want you to see the big picture because we want to not only make you a homeowner, but we want to prepare you for home ownership. Aaron, EquiFirst Lending, where we put your future first.